Test 1, 2. For today, we've got, it's the Monday before, the 24th and 25th. I think Top Step has weird trading hours tomorrow and the day after. But right now, I ultimately have 2 draws of liquidity. Got one above the market here, a very smooth high. And then we've got the unfilled end walk and week opening gap just below us. So right now, my bias here is I do want to see this filled before we go long. But we do have to see if the market's going to give and clean for us today. It is Monday. A lot of holidays coming up this week, so we'll have to see. What I was waiting for actually before the market opened or during the pre as a fill to this 15-minute SIBI and then taking it lower. But price never really rejected it nicely and it broke to the upside. Not much respect for this right here. We'll have to wait a bit longer to see what price can give us here. Nothing clean, so nothing clean on the 15-second or on the 1 minute as well. Today price on the 1 hour or on the daily, if we start there, we have equal lows resting below us. We did have a strong bearish push last Wednesday. Price has been essentially consolidating over the last 2 days. Thursday and Friday, you can see these doji type candles. Not a lot of movement. They're all inside bars if you just look at the bodies. And then today, price. Again, my draw is down here today, but it can definitely go up higher and tap these 2 areas of liquidity before dropping lower. But price is on the weekly. It actually moved down to the latest bearish order block. So again, you'd see here that the time frames are all saying something different. But we will see what price is going to give us today. Right now, price, it broke above this 15-minute SIBI, but it's breaking back down with the second 15-minute candle, which is fine. It's not ideal. If today we see a close lower, we start breaking past, this 15-minute SIBI, that's where I might be interested in continuing the bearish order flow and taking it lower. But for that to happen, I would want in the next 8 minutes for this candle to close bearish and then see if we can start breaking down these further levels below us. And I would be interested in taking a short here into these lows to the WOG. But as of right now, on the 4-hour, again, price is kind of sitting between equal lows, equal highs. It's below the 4-hour SIBIs. In terms of premium discount on the most current run, it's currently sitting right below the mean threshold of it. So we just got to wait a bit and see what price can give us before we take a trade. I have a feeling today might be a lackluster day just because it's the 23rd of December, holidays coming up. Wasn't planning on trading today, but thought the same last Friday, and I did have a clean setup. So I will see today something similar might occur. We want to see some Judah, quick acceleration, fair value gap forming, and taking that to a target. Smooth highs, smooth lows, to some inefficiency, etc. We will see. Price did form a lot of buy side imbalances on the way up, hitting this daily sell side imbalance here. So again, price needs to show something significant here before we make a move. And just looking here on the 1 minute here, trying to find a level to short. All I see right now is this level right here, which is essentially going to be our unfilled new week opening gap. There was no buying or selling that happened here. It was a clean open. Sometimes it actually trades through really quickly, but you can see here there is no buying or selling that has happened in this price. So it is acting as a magnet for future price. And, as ICT says, NWOGs are a lot heavier and stronger than NDOGs, new day opening gaps. Morning, Douglas. How's it going? That's the current. Good morning. Good morning, Alex. That's going to be the current rate of the market. Today we've got one news event happening at 10 a.m. It's medium impact news. It's the CB consumer confidence. So a move might happen after 10 o'clock. We'll see some volatility come into the market. Might see an opportunity there, if not after 9:30, but we'll see if maybe at the 8:30 algo something might kick in and we'll see this end dog fill or these relative equal highs, less liquidity you're thinking here. No trading today for me, but I'll look at it. Yeah. Same here, Douglas. For me to take a trade, I'm going to have to see something so clean that I can't say no to it. I don't even think last year I traded this day, but I decided to do some, at the very least, doing some tape reading. You can see here, after midnight, price hasn't really done much. It's essentially, it was very low volatility, just looking at the 1 hour bodies and the candle sizes relative to what we had on Friday. So as of right now, we are staying within Friday's range. But if I were to coin flip, I would want to see a heavier side go to this unfilled NWOG versus these highs here. So that's where I'm placing my forecasted future here. But nothing is tradable right now. This is all. If anyone traded this morning session, at least after 7:22, it's just asking to be taken out. There was an initial run up at 7 o'clock. Price moved higher to the upside, and then it started forming fair value gaps, and it started respecting them very nicely for 22 minutes up until it got to this inefficiency here on the 15-minute chart. But the reason why I didn't act on this is I just hated the fact that we had a new week opening gap 20 points below us, 30 points. And there would have been a very high chance that price could have just tapped into any one of these opposing highs, reversed, and then taken out the low and then pushed to the 15-minute fair value gap. So what we have here is, let me do some annotations here, 15-minute fair value gap. That's weird. Why don't I copy through? Yeah. Here we've got a bullish fair value gap that would have to break through. And then once it breaks that, getting in short will be higher prob than up here. The 15-minute candle is going to close in 1 minute. We'll see where that body sits. If it closes below it, that might be the first indication that price might want to go lower versus higher. But as of right now, nothing high prob, at least from what I'm seeing. See what's happening on the 5-minute here. Yeah, so on the 5-minute, we've got I think this would be a level that I would want to have a break as well before seeing lower shorts. but nothing too interesting on the 5-minute here. We've got this right here, which is really interesting. It's just a run lower, which created a lot of low resistance liquidity here. This is an area where price will tag in the future. When? I don't know. Could be this session. But seeing something like this where no previous high gets tapped and it just continues going lower, this is just battery, just fuel for price want to go up here again. So this is something that we have to watch out for as well. I'm just at the 15-minute. The 15-minute close in the bottom half of this 15-minute fair value gap. Again, that's not indicating much. On the 1 minute, it's still moving sideways within it. So in 14 minutes, we'll have our 8:30 macro. And it really has one of two options. Either it does something or it doesn't do anything. And if it doesn't do anything, that means we're waiting until 9:30 at least to see what the open's going to give us. But let's do a small activity right now. Let's look at where price closed out on Friday. If I click on RTH, regular trading hours, I can map exactly where price closed at. And that is at 4:14 on Friday. It closed at 21,564.50. So essentially right here. So the RTH gap. Is that correct? Yeah, that's correct. Yep. 21,564.50. Have that transposed to electronic trading hours at 21,564.50. And we can see right now we're opening bullish, or we will most likely open bullish if prices can come back down here. But this is indication that the price might be, fooling the retail traders, opening up higher, everyone thinking that it's going to be a bullish day, gives its due to swing, and then starts spiking lower to fill this end walk. So that might be the story, the narrative for today. But seeing the close of yesterday being below us, this is further indication that this bias might play out that I'm sharing here. The unfilled NWOG opening gap being lower. All might be okay. Has anyone here taken any trades over the last week? I've just taken one really on Friday. I haven't traded on Wednesday or Thursday. I've personally noticed the less I take, the more I make, which is a hard concept to grasp. Back in the day, I used to trade a lot, at least one trade every session, but then I realized if I just focus on the ones where you feel ultra confident in, it's super easy to read price action, and you just have this gut feeling that it's going to push higher or lower based on specific PD arrays or what price is showing. That's the trades that you take. I stopped trading after large range days, the mornings of FOMC. I realized that it's either you're caught offside or you're caught onside, but looking at the law of large numbers, it's usually closer to the 50-50 for me. So I decided to take those days out of my trading routine. All right. Price is still sitting within this 15-minute fair value gap. It's not doing anything. It's creating insignificant SIBIs or BISIs, fair value gaps as a general, because you can see the bodies aren't respecting them. They're closing above, they're closing below, and Technically I can paint some logic here, but it's not material enough to trade off of. So I'll want to see something form from a higher time frame, show some direction, and then drop into the 15-minute or the 1 minute, the 15-second, and start sniping entries from there. If something were to show today, but my confidence is it's probably not. I don't really look at ES, but let's look at ES quickly as well. Let's see. This is interesting. So ES took the 19 slow, but if you look at NQ, oh, the 19 slow. Right here. So there is some SMT between NQ and ES on the daily. Technically there was a market structure shift on ES here. But a level that really caught my eye here is this one right here. These equal highs and lows are just too obvious. And what's interesting too is we've got a low resistance liquidity run here above us as well. So interesting market here. They can push higher, grab these out, come lower, or it can just start punishing and going lower after projecting this sell side imbalance, buy side efficiency. Wrong color. It's happening on the 4 hour. So the 4 hour has a MMS shift to the upside. It's pushing into that daily SIBI here. The one here. Yeah, price hasn't done much since yesterday or Friday's close. It's moving sideways. So you can see here also on ES, I do think it's gonna, I do prefer these double bottoms over this low resistance liquidity run here with the market structure shift. If gun to my head, I think it's gonna go lower than higher, but right now price is just painting a picture where it's just a bit unclear here from the daily perspective of what price might do next. You can see price reached into this SIBI here and it pushed higher. So let's go back to NQ. I don't really look at SMT too much. I strictly focus on NQ, the price action that it shows me, and that's what I trade. I think less is more. And ultimately what you need to do is just pick out your PD arrays that you want to use and comfortable with, and you have some kind of technical plan along with sound logic behind it, trust your analysis, and that's what you trade. I think there's 81 PD arrays that ICT uses, and using all of them, I think you'd go crazy. So we will see. The price is doing nothing now. It's been consolidating ever since 7:30. I have 5 minutes till 8:30. I'll go. There's Alex is coming right now. I think we're going higher today. Yeah. Yeah. We can go higher. Yeah, this is weird. I see us going both ways. It'd be perfect if you went lower, filled that end walk, and then just blasted higher. That would give me full confidence to swing for the fences. But with today being the 23rd as well, I just don't know. Let's look at price action from last year. Let's see what happened on the 23rd. So let's look at year 2023. June, July, August, September, October, November, December. December 23rd. This was a Friday, the 22nd. It was a doji, very low movement. And then on the 26th, 27th, there wasn't a candle on the 25th, on the Monday. I don't have much to go off of here. Let's look at the 1 hour. Let's see if my data goes back far enough. 830 just kicked in right now. We'll see what price does right now. May, December. Okay. So this is going to be Christmas, Monday the 25th. I didn't print a candle on the daily. That was interesting to see. But the day before was a Friday, and we can see the 830 really delivered, but the 930 was very lacklustering on that Friday before Christmas. And then we got 26th. So let's go back one more year. December of 2022. Okay, price is breaking down right now, this 15-minute fair value gap. We want to see a bit more here. Right now, price is moving. See, 830 kicked in. And it might be spooling to a new direction, which might be this NWOG. Before it does, let's see if we can find what happened December of 2022. Okay, we're close. There it is. '28th, 27th, 23rd, again, 23rd. Yeah, so you can see, there was significant movement after the 930, even the 8 o'clock here on the 22nd. Looks like price picked up. Very similar Asia session where nothing's happening, and then right when 830 hits, you can see movement to the downside, and it was pushing to a target. I don't know what the target was back in the day, but it was pushing to a target. So let's have a look here. Okay, price has broken down this BISI here, which is good to the upside. All right, I think it wants to clear out these lows now. We've got the 15-minute closing in 11 minutes from now. Just broke. It is breaking the 5-minute fair value gap. And there's also a 15-minute fair value gap here as well. Is it going to be using this as inversion? Most likely. All right, when price goes up a bit higher here, I want to see how it reacts to this 15-second fair value gap. So far, I think we are commencing the sell program here to this NWOG. Just take a quick short here off of this rejection. I am targeting 560. I'm not risking a lot, only $100 on this one per account. But I essentially I'm playing it off of this 15-second order flow here, where this is my order block. And I wouldn't want to see price right above it. It could possibly trade back into this fair value gap here on the 1 minute. That's the risk that I have. Oh, man, let's go. Trade being copied to all my accounts. And you can see price right now is really pushing after the 830 drop there. Very aggressive. It's forming breakaway gaps. It's forming fair value gaps to the downside, which is what we want to see. 566. And we can see here, like once it's in a sell program, look how these fair value gaps are being respected and these order blocks here. Price is just dropping like a rock. I currently have only $60 risk on the table. My stop loss is right here. It's above this fair value gap, above the mean threshold, and above this wick, which is also acting as possible support. But once price breaks this high test here, that's when I might do a manual close. How do I close custom contracts? I'm not sure what a custom contract is. I'm gonna do a partial right here at 572. So I'm gonna sell 2 of my 5 micros here, sold, and then the rest of my position is about to sell any second now. And just like that, come on, keep going down. I think there's a 95% chance it should get hit right now. Shouldn't reverse on us. But I do have 220 locked in per account. So just over 1K. I took the trade short with 5 contracts. I need to sell 3 in TP and the other 2 in price partial to top setbacks. So you can right click and you essentially click on buy limit at a specific price, and you select the price that you want to buy, or you can click on flat and all if you want to close the entire position. But if you want to do a partial, then you just buy. Like if you're currently selling 5, then just buy 3 and it's going to automatically keep 2 on the table. Does that make sense? So just buy whatever you want to take off. Yeah. All right, I've got my stop loss sitting right here. Oh, sorry, I made a mistake. It's sitting right here, actually. It's sitting above this 1 minute order, bearish order block. And there's also this mini fair value gap here. That's protecting my stop loss. Oh, and we're out, guys. So that's $396.80 for my leader. And my followers have the exact same profit as well. So that's a nice quick trade. 400 times 5, $2,000. It's going to help pay off some of the gifts this year. So that was eventful. Did anyone catch? It looks like JB caught something. Anyone else trade? I actually wasn't planning on taking any trades today. Swear to God. Yeah, wins for the team. And this is what we look for. This is, when I say I'm not planning to trade, I wasn't planning on trading, but look what price did here. It went into the 15-minute fair value gap. It broke to the upside. On the candle after that, traded back to the lower half of it. And then right when 8:30 hit, you can see that it started printing lower. And the moment it started printing lower, especially on the 15-second, it was respecting every single upside fair value gap, right? So here's the first one at 8:33. That's when I wish I got in, but I didn't. It rejected it. It created a hefty 15-second fair value gap and a 1 minute fair value gap. I did have an initial order set right here, never tapped me in. And once it started breaking down lower past the body of this 15-second bullish order block, that's when I got in. And it essentially gave me, it was a 4-1. It wasn't an 8-1. Cut it a bit lower somewhere. It was like right here. That's where I caught it. Just a matter of like speed at that point, how fast you can click sell with enough contracts and make your stop loss an actual size. But what would I be looking for now is the NWOG has been filled. And I really want this liquidity to be taken on the top. How much size did you use? Only 5 micros. So half a mini. Just because today is the 23rd. Usually when I take a trade, My risk is between 200 to 300 for that trade. And depending on how big my stop loss is, that's how I essentially scale into a trade. But in this case, I just took 5. It was $110 of risk, which is what, $600 across my accounts for 2,000 of gain. So it was a quick one. And what ICT says when it comes to, I guess, like trading, you guys can make a lot of money by trading one micro. So not a mini, but a micro. It's a tenth of a mini. I've only traded 5 micros there, so half a mini, and it pulled in $2,000. So if I just traded one, it would have been 5x less than that, so $400 across all my accounts, but that's still insane money for one small trade. And in my opinion, if you guys can't make profitable gains off of one micro, you guys should never go to a one mini, because it's that much faster. It's 10 times faster to blow an account. Wait for the right moments. Wait for that edge to appear. And it's interesting. What also gave me the confidence here is right before this trade spanned out, we looked into the previous day before Christmas and what happened. And both years, price spooled at 830. So I'm like, what are the chances of it spooling again at 830? I'm like, maybe medium. So that's when I saw order flow being respected. Order flow on the upside wasn't being respected. And that's when you make a shift there. Facts. Can you go over it? Yeah, Jubilee, sure. So essentially, we had NWOG, right? The new week opening gap. What is this? It's a very strong pull of price especially when it's unfilled, but even when it's filled. And the bias that I drew for today was a trade to the only 15-minute fair value gap that we had. So it's an area of inefficiency. Price consolidated for an entire hour. And then right when the 830 algo hit, we started to displace lower. We started creating fair value gaps and breakaway gaps. We started breaking bullish SIBIs, which ultimately turned into inversion fair value gaps, right? So we can mark them as orange. And then price was breaking to the downside. And once I saw it essentially break down on the 15-second here, I didn't think that price is going to go back up and fill this. And that's when I took the short here. So my short had a stop of, right there. And I took it down all the way to the bottom. If price were to stop me out, I would re-enter again right here. But just because the way it was exploding to the downside after 830, I don't think price had the juice to go back up. And that's purely with experience. But if I wanted to have a safer bet, I would have put my stop loss right here, and I would have been very happy with this trade as well. But it just would have been a double re-entry for me, if anything. But this would have been the better trade. Super safe. But if you're really trying to manage your stop loss within 10 points, that's the 15-second trade that I took. 15-second order flow, 15-second management. And the moment it started breaking down lower and not even attempting to trade into the upper half of these 15-second fair value gaps, and it already traded into the 1 minute fair value gap there. That's why I thought it's going to go lower, and it did go lower. So right now it's, when's the next trade? If we are going to trade higher, would I take it right now? No, just because we traded to the NW or the NWOG of 1223 doesn't mean that we're just going to start shooting up higher from here. I'm glad that we filled it, but what I want to see is some more manipulation to the downside, maybe at the open, if I were to see a huge spike down, taking out these relative equal lows and up higher push up with a first for value gap that forms, I'll be taking a long from there to the most recent highs, right? So area number one, that's really catching my eye. That might be taken at 930 is this right here. This is resting liquidity here. And then area two, if we do tap this, there's a very high chance that we are, well, not a high chance, there's just a chance, a higher chance than 50-50 in my opinion, that we will attack this liquidity right here. And all this right here is low resistance liquidity. This is essentially just money here waiting for the market to grab. This is retail trend lines, known as phantom lines, as ICT calls it. Hey Dom, I just joined. What was the thought behind that trade? Do I ever use SMT? I used to Jubilee, but I stopped just because what I want to see from ES and NQ most likely is them trading together in sync. The moment that there's SMT, we enter lower probability conditions. And eventually my trade had evolved to not looking at it and strictly looking at NQ price action and finding opportunities within it. Just because the more I listen to ICT, the more PD arrays were being introduced. And I just filter out the ones that I didn't really use to too much or that didn't provide a big enough edge for my trading. So I don't use SMT. There is right now daily SMT. Is there 1 minute SMT? Maybe. I don't know. Right. But like if we quickly open up at ES right now, like was there any SMT here? Maybe there was. I don't see any on top of my eye right now. Looks like 650 lows were taken. The 650 lows taken here. Those are the 4 o'clock lows. 650 lows they were taken here. So again, I don't use SMT. If you do use it, it does help. I would use SMT as like the cherry on top. Like if everything's looking good and SMT is showing and you're seeing bearish strength on NQ, then that might be like the 6th confluence factor of taking something short or long. So that's just my take, but I highly recommend all of you to find what works for you. Like look at your data, log your trades, see what works, see what doesn't, see how many times SMT did work for you or didn't work for you. For me, it was so close to 50-50 that I said, I'm not using it anymore. It's not giving me an edge. If I see it and it's my like 10th confluence factor that it's going to go short or long, I will take it. But all in all now, not something that I trade with. What to expect for the 930? For the 930, we're going to be opening up at Friday's close, most likely. We're around there. When we're looking for energetic 930 opens, what we're usually looking for is the RTH gap being higher than 50. Right now, the RTH gap, if we were to open at 566, it would be 0. It would be like 5. Whatever the difference is from this red line to where we are right now. Actually, let me annotate this. This is Friday's close, and let's make this in red. Okay. I want to see this above 50 points, 50 handles at a minimum, 30 at a minimum, but like roughly like between 30 to 50. And that's when I will trade the 930 to 10. If it opens up below this level here, what level did I just mark? Like around 610. If it opens up somewhere within this level, I'm going to wait till 10 o'clock to trade, 10 to 11 or 10 to 10:30. But if I don't see energetic opens or large RTH gaps, it's not going to give me an energetic open. And usually when they're not energetic, that's when I lose money. So it's again, finding what works and what doesn't. ICT said, like, this is a rule that he created for all of his listeners for 2024. If the RTH gap is below 50 points, do not trade 930 to 10, wait for 10. Okay. Very simple. And the more of these rules that you create for yourself and you follow, don't trade after a large range day, large RTH gaps, don't trade holidays, don't trade FOMC, you'll see that your losses will get less and less. And there's a higher chance of you making money out of the market. So that's that, guys. But good questions. I know when you had 46 subs, I would love to stay in the community of your YouTube. Yeah, JB, my community's not going anywhere. I'm going to be here for most likely a long time. I'm going to try to grow this channel and try to share and live stream myself so that you guys can see how I view the markets personally. Am I the best trader out there? Definitely not. Okay. But I think I'm good enough to find an edge in the market and to pull money from the markets. That so far I can do efficiently and effectively. And I guess as the months pass by, I just get better and better. Right now, what I'm doing in my pastime is I'm re-listening to ICT stuff and I'm taking extremely detailed notes of what he said. And like today, I was watching one of the 2024 lectures and it's really interesting. It was a note that inefficiencies are subordinate to relative equal highs and lows and WOGs and NDOGs. So this efficiency, so to give you an example of what that means is this efficiency that we have here on the 15-minute chart, it's subordinate. It's less important than this unfilled NWOG that we have here below us. So for me, this was the draw. Earlier in the recording, I'm like, if I were to bet my life on it, it would be NWOG that we're pulling to versus these equal highs and relative lows. So have that in your notes. Like if you see relative equal lows and a fair value gap, the relative equal lows take precedence over the fair value gap. So what's going to happen now? Most likely there isn't going to be a trade present up until 9:30. If it is, you're gambling. And then at 9:30, we'll see what happens. But we can see here on the 1 hour, price is just effing around in this fair value gap here. We've got one below us as well that it can trade into before going higher. But all in all, what price did on the 1 hour, it created a market structure shift here. So here's the first market structure shift right here, right when price passed 21,296. That was MMS1. And then MMS2, which is market structure shift, is right here, right at 8 o'clock on Thursday, right when it passed it today or on Friday. That's when the market shifted to the upside. You can see it more on the 4 hour. Like this is more of like a 4 hour MMS, which holds, I guess, stronger gravity over a longer period of time of it wanting to go higher. But again, this is a classic MMS that IC talks about. It would have been stronger if it tapped this liquidity and then went higher. But because it didn't, it created relative equal lows, a market structure shift. And this is indicating that, to me at least, that the market might go higher, but it also might go lower because of these equal relative lows. So this is a low probability position if I'm looking at the 4 hour time frame. Right? Can we still trade the 1 minute? We can, but if we're doing really long swing trades, multiple hours, this is throwing me off right here. I wouldn't be taking shorts or longs because the market is telling me two different things, right? It's punching into this daily SIBI. It's rejecting it. We got equal lows here, but it's also forming pretty large fair value gaps to the upside. So when we're in markets like this or similar markets to the 1 minute, this is markets that you don't trade. We wait for a bit more, and then we take our shots at the market. I'm going to take a quick 5-minute break. Nothing's going to be happening over the next 5 minutes or the next 30 minutes. So it's going to be a bit quiet, but we'll see what the 9:30 gives us. And yeah, hopefully we can catch, again, not forcing anything. I'm not planning to take any trades, but if something does appear, my interest would be right now to the upside. The downside, do I have any interest? Let's see here. It's just these relative equal lows here. That's it. And right here, this is all liquidity here. These relative equal lows, these triple bottoms, these quadruple bottoms, depends how you look at it. That's kind of draw too, but I do want to see these highs being taken. So again, right now it's 50-50. There's two possible stories that might unfold. And the moment that we start seeing one unfold and we're seeing order blocks and fair value gaps form in the right direction and we can put our stop somewhere meaningful, and that's when we start executing. Do I use fib? I do. So I'm using fib right now. So each of my fair value gaps has a built-in fib. I always look at the mean threshold of it. So for example, like this fair value gap right here, right on the 1 minute, right? I know exactly where 0.5 fib is. It's right in the middle. When I look for retracements, I roughly have it in my head when we're above halfway or we're hitting like 0.62 to 0.78. But all in all, I used to use a lot more. Now I just look at how price is shaping up, where it's looking like. But in my head, I'm drawing fibs out. So if it'll help you guys, I might start drawing out fibs a bit more. But the most important fibs for me are 0.5. Or when it comes to like extensions, like when we're looking for a run, let's say, let's see here, right? So we have a run back to the fair value gap. Like how much farther can it go? So the answer to that is very simple. Price can usually go either to the most recent bottom or negative 0.25 fib extension. So this is one that you'll see me use, looking for targets on runs. And you can see here, it tagged it. Even though I don't want to trade through this new week opening gap, and I wouldn't recommend you do it as well. See, like look what it did. It just fully rejected it and is going to the upside now. But negative 0.25 is a fib that I use. 0.5 I use to see where I'm in the marketplace and also how fair value gaps are being rejected. But other than that, like 0.62 fib retracement on an SMT, that's like the 2022 model. If you trade that, great. But as of right now, don't use it that much. And anywho, I'll be back in 2 minutes. But good question, Jubilee. Okay, I'm back. We've got price doing what right now? They rejected the NWOG, the NWOG. It looks like it's pushing higher. But again, everything's low prop, in my opinion, up until 9:30. You guys can trade it, but is it going to go up? I think so, right? But for it to go lower, I want to see it break this and WG to the downside, use it as an inversion and go lower. But sometimes I trade away from these levels, but most of the time, like 70%, I use them as draws on liquidity. 50 points there that we caught today. Not bad. 50 points is considered not a scalp in ICT's eyes. He said everything under 50 is a scalp. Everything over 50 is intermediate. So I just breached the level of an intermediate size trade. I should have risked more. There's my greed fighting with me. Instead of risking 100, if I did my average $300 risk, it would have been 3x of 2000, so a 6K trade. But it's okay. Little by little, that's how you build your accounts. Don't over risk. And the moment that you're over risking, you feel it deep down in your soul. You're like, I feel very uncomfortable. I think it's going to go up. Did you lower your risk because it's pre-market? I lowered my risk because it's the 23rd. I wasn't supposed to trade today. But I told myself, I'm just going to live stream today, do some tape reading. And because I saw the unfilled NWOG price reject the 15-minute fair value gap, start explode, do nothing up until 8:30. And then right when 8:30 hit, the market essentially opened up. Those were 5 different signs that like price is most likely going to hit here. And that's where I thought it might do something silly, but on a regular trading day, it should hit this target. So that's why I only risked essentially 30% of what I usually do. But you'll see me, if you guys do watch me, but you'll see me sizing up and down depending on my confidence of the trade and how clean price action is. The moment that everything is aligning with the trade, you'll see me size up. And the moment that I'm a bit more on the sidelines, I'm reserved in some way, that's when I'll take risk off the table. I used to trade where every single trade was like 1%. When I did Forex back in the day. But now it's just, when I get funded, I take 10% of that, which is, $200, and each trade is 200 USD. Once I build up a buffer big enough, like over that $2,000 drawdown limit, that's when I start sizing more. But then after takeouts and after I remove from Top Step, when my equity drops back below, I go back down to like 200 risks until I size it back up again. So it's like a little dance, trying to stay away from hitting that drawdown limit. And the closer I get to it, the lower my risks get, and the farther away I get from it, the larger my risks get. So it's all relative to price and risk. Do I only use ICE concepts like ICT? Yes, Cleric. Only ICT. I did do other concepts in the past, like your retail resistance and support, trend lines, etc. Fibonacci retracements, RSI, etc. I didn't find myself profitable at all, even though I know traders that are profitable. And then ever since ICT came out, I just said, hey, listen, this guy looks like he knows what he's talking about. I studied his stuff religiously. I back tested, I forward tested for I think it's 3 years now. And it's purely ICT. And am I going to add something else to my trading? Most likely not, because why would I change something if I'm making money? So currently I'm a pure ICT trader. I don't even use the DOM. I know some people look at depth of market and where buy side and sell side sit and where liquidity sits in the market, but ICT made a really good point. It's very easy to tell where liquidity sits in the market. Relative equal highs, lows, gaps like the NWOG and the NDOG. And that's essentially replacing those messy charts that you see in other traders, right? So I like how he preaches. I know that he has a very interesting personality, but I don't know, I like the guy. So I have nothing against him. He helped me stay profitable. How do you deal with stress of being on Express? I've blown 3 accounts in the last months. As soon as I get funded within 2 to 3 days, it's blown. All right. So I guess question 1 is, if you blow them within 2 days, how many trades do you take within those 2 days? And how big are those trades? So that's my follow-up question to you. Because that means, assuming that your trade risk is 200, it means that you are risking $200 per trade. You blow them within 10 trades within 2 days. Taking 5 trades a day is a lot, in my opinion. It just means that there's 5 really good opportunities that you've taken between 7 to 11. And, Jubilee, if I were to guess, I feel like the moment that you lose one trade, you feel like you have to make it back with the next trade. And I think without even knowing anything about your trading, it's the most common thing I've seen amongst like colleagues and close friends, where you lose one trade, you're down $200. You look at your P&L and you're like, shit, I can't close this day off at minus 200 across my accounts. If it's just one account or 5 right? So what you do is you look for the next best thing in the next half an hour to 1 hour. And even though it's not an A+ setup, you take it anyways, because you want to break even. And then you see minus 200, another 200. So you're at minus 400. You're like, fuck, I shouldn't have taken that. Why wasn't I more patient? Okay, let me risk a bit more. Let me make that 400. Let's get back to 0 and close it off. And then it's like this vicious circle until you blow your account. So the best way to do it is, guys, if you take a loss in a day, and I would say you're not profitable or consistent enough yet, I would say either take a walk for half an hour or close it, lock yourself out and come back the next day and treat it as a brand new trading day. Hide your balance, hide your MML, only have your RP&L open, and that's it. And you'll see no red. It's just all gray, all 0, and trade that. That should help. But the moment that you feel like you have to make back a loss, I think you're already losing and you will blow. For me, I have a 2 loss limit. The moment I hit 2 losses in a day, I'm done. I lock out and I walk away, because I know that if I keep trading, there's a chance I might get into unfavorable price action, trades, etc. And just like you, very easy to blow these accounts. I just put 5 minis on, and within 20 seconds, it's either I'm up 5K or I'm down 5K on all my accounts. So, and then that negative emotion trails to the next day. I have to go back on combines. So try doing that, guys. Max 1 to 2 losses, close your accounts. I'd say at 2, definitely close them. At 1 loss, take a walk. Take a 5-minute breather, 15-minute breather, and just come back to the markets. There will always be opportunities. Even today, I wasn't expecting an opportunity. One showed up and I took it, but every single minute, there's always an opportunity to take. So don't feel like you're missing out. Claris, I bought 5 100K static accounts from Apex. I feel if I manage to pass these, then I'm on the right path. Let me see what static accounts are on Apex. I haven't looked at Apex for a long time. Apex trading. All right, Apex funded accounts. They have 200 or 625 drawdown when you start. Oh, really? Okay. In my opinion, no one here should have more than 1 account if you're still trying to find profitability. If you want like an account to trade off of and to manage your trades, I would say opening up 1 account and see if you can get a payout. And if you can get a payout, then open up a second one. But in terms of static or not static, hold on. I'm just looking right now at their products. Okay, so there's Trade Evade and Rhythmic. I think back in the day when I was trading with Apex, I don't like Apex because they denied a payout for me and I stopped using them, but I had 20 Rhythmic accounts and they were all connected through a trade copier. Yeah, they were 227 each. Yeah, that's $27. Oh, that's dirt cheap, man. Are you on Twitter, GB? I'm not, but maybe I should be on Twitter. Okay, 25K full, 50K full, 100K full. Are you on the 100K full, Claris? Oh, 100K static. I see it. So I see it as 137 a month, 2 contracts, profit goal 2,000, total drawdown. So what happens when you hit your profit goal? The 2K on the static. Do you get a payout of 2K or do you start making money after 2K? Can I join you as a member or mod on YouTube? Love your voice and your knowledge. Yeah, you can feel free to drop in whenever you want. I think my channel is way too small for mods right now. And I don't have any members, to be honest. As of right now, I'm just sharing my stuff for free. The moment I feel like it's unmanageable and I see a couple of serious traders that want more than what I'm providing, maybe I might change things then. But as of right now, for the near future, it's just going to be free streams on YouTube. But then you have to build a buffer of 2.6K. Okay. Yeah. So, Claris, if regardless of the account that you have, if it's full or static, I highly recommend Top Step. But usually what I've noticed is on Top Step, because I trade off Top Step, the only accounts that anyone here should be buying is 50Ks. 100K or 150K, no point. Trading at 5 minis on a 50K is already insane. And knowing that I can do 10 minis on 100K or 150 minis, or 15 minis on 150, that's insane to me. I would be blowing things instantly if I was doing, full leverage. That's like 2 losses max, 1 if you're lucky. So, kind of answering your question, Clara, is take it slow. If your risk is 600, which is so little, right? And you have to make a 2.6K buffer. That means you have to essentially like 5x your drawdown to start making money. So in my opinion, I think that's an unfavorable model. Even though it was $27, would I buy it? No. What I like about Top Step is you have a 2K drawdown and you have to make 3K. And once you do that, you're funded. Very simple. So in your case, Claire, if I was trading an account with 600 drawdown, I'll try to break it up to at least 10 losing trades in a row and my account's blown. So each trade would have a risk of $60 and a minimum reward of 120. So 2 to 1s at the minimum. And I'll trade that until I build a big enough buffer. Once I have a buffer of 2K, then I would start risking more, $200 per trade, but I'd break that up into whatever your drawdown is, divide that into 10, and that's how much you can risk per trade. I think that's reasonable enough for a funded account. If it was my real money, I'll be trading 1 to 2%, but I think 10% is fine on a funded account. Because remember, the whole goal of these funded accounts is to extract as much as you can, and then to fund your own accounts. That's really it. I'm trying to get on the leaderboard for Top Step, but I'm going to apply soon to be a brand ambassador if they'll let me. But until that time comes, I'm just pulling money from them. And if you blow, you blow. Claris, I have 2 top 50 accounts passed, but I don't want to pay the activation fee because I am from one of them being restricted countries and I won't get a payout. Oh, okay. So, right, Claris, I remember. You're from Albania, I think. So you're right. Apex. All in all, if you trade the accounts correctly and it's relative to your drawdown, then you should be fine. If it's 600, start off with $60. Okay. And then if you make $200 on one of your trades, then your drawdown is going to be 800. And if it's at 800, then start risking $80 per trade and grow it that way. Where am I from? I'm from Canada. I'm from America. Actually, I just took a little trip to America. Just came back yesterday night. And then I might fly down I really want to go to Dominican first week of Jan, but I'm just freaked out about these these drones. Has anyone here heard about the drones that are flying in New Jersey and like in Hong Kong and China and UK? And if you haven't, the news is that there's these drones that are flying around and that are creating fear, but no one really knows what they are. Right now, I've grown into 1.1K drone. I'm perfect clearest, 4 days of trading. So I would be risking personally, at my risk reward, at my strike rate, I'd be risking $110 per trade and trying to scale that up. And once you hit 2.6, you're at 2K. Just take it nice and slow. I'd probably say if I was trading that account or any account, I would be anticipating a payout in the next like 3 months. And if you make that goal that, oh, you know what, if I get paid out in 3 months, I'll be okay, no rush. And then believe it or not, it's going to be mid-January and it's going to be like, oh, payout time. Do you want to do it or do you want to keep growing? So don't try to force yourself into taking a payout. Don't speed up the process. The moment you start rushing it, I even lose, right? I don't put targets on when I'm trying to get payouts. The week before last, I took 2 pretty bad trades because I wanted a really big payout before Christmas and I just wanted to flex. But what that did is I took like a B- trade. And then I took a revenge trade after that, which essentially took me down a bit on my funded accounts. And that's when I'm like, oh, I'm done. Let me take off this target that I created for myself because it's not doing me any good. So take it slow, take it easy, manage your risk, manage your trades, your losses per day. And I think by managing that part of your psychology, trading should be a lot easier. You just can't rush yourself. Exactly. And while you're doing that, if you have time, study ICT. Go on his channel, 2022, 2021, 2023, pick a mentorship, take detailed notes, start writing it down. Just keep filling your brain with ICT. If you were to ask me how many hours I listen to ICT, the answer is too many. And it's crazy enough because I'm doing it once more. But this time I'm like, this is the last time I'm listening to 2024. I'm going to take extremely detailed notes, pause the video, and then I'm going to create a little package for myself. It's going to be 51-page document, a page for each of his sessions on all the nuggets that he gave away. Like today's nugget was that NDOGs and WOGs and relative equal highs, they are better or stronger pulls than inefficiencies. And that was my take home today. I knew about that, but I'm really going to ingrain into my brain that if I see something opposing an NWOG, I'm going to prioritize these levels versus like a fair value gap that needs to be filled, for example. In today's session, he also talked about like trading the 1 p.m. bond auction. So if there's no news in the morning and there's a 1 p.m. bond auction, there is opportunity and clean trades in the afternoon. So that's also going to be a page in my little document that I'll be building out of how to trade these specific events. I have like a little appendix. When that event happens, go to my notes, see how to trade it, see how ICT traded it, and try to copy those results there. For 50K, how much risk reward should be there for 50K accounts? When you're doing your combine, USD INR, try to pass it. The way I pass combines is it's a 2-day pass. It's take 150 or 1.5K trade day on ultra high probability and do the same thing the next day. The combine should be a 2-day pass. And they're so cheap too. So even if you're wrong, just reset it and just do it again. And then once you get your Express account, that's when you take things a bit slower. I love ICT in the middle of the video. He goes to rants. Yeah, it's really tough. It's really tough. Maybe in the future I might release like this like PDF book that I'm writing. It's again, I'm just extracting the most important things that he's talking about. And I think that's something that I would want when I first started trading versus listening to his rants But the funny thing about his rants is in the middle of his rants, he drops a nugget, 30 seconds, something very important, and then he keeps ranting. And it's so easy to miss it the moment that you are multitasking, which is so easy to do, right? Like if you're playing like a game like Dota or Apex or something and trying to listen to ICT, that doesn't work. Like your full attention for 4 hours has to be on one video and listening to every single fucking thing he says. So, all right. So you can see here, we're 3 minutes till open. The NWOG has been filled in really nicely. It's been wicked through many times. Even though that we've traded to it, it's still an active PDA. Like these things don't expire. They're just hotter when they're not filled, right? But like it's still like price can still gravitate down to this NWOG. What are we looking at here? On the 1 hour, price is sitting within this 1 hour BISI. It's still below this daily SIBI here. Daily sell side imbalance, buy side efficiency. It's trading right now into, we have a 15-minute SIBI here. I won't draw it in, but it's very obvious. All of you see it. And what we want to see after the 9:30 open. So our opening gap is high. It's going to be above 50. So that was one of the conditions that I told all of you earlier today. Condition 2 is we'll see a green bar form here at 9:30. And I'm going to be waiting for some kind of Judah, right? Like there's like liquidity, sitting below these lows. Like if I can see some kind of like reaction lower, takes out these lows, hits the NWOG again and goes higher, that's giving me an indication for me that we might go higher. I would want to see this 15-minute fair value gap, close to the upside as well. And once we get somewhere here, that's when I think higher highs are going to get tagged. Like that's where it's going to get safe to trade. I'm not saying that it's not safe down here, but you'll have to see the right opportunity. And it's going to be one of those trades where it's a 30% chance of hitting, but if it does, it's like a 10-1. So we'll see. I'll see what shows up today. And we will take, but I do want to see. So what ICT says is there's a 70% chance that the 50% point or mean threshold of the RTH gap is going to get filled. Okay. All right. This is RTH gap 50% points. All right. And then looks like 9:30 just opened up. And we're waiting for two things. Some kind of Judah, first fair value gap. And those are going to give us our high confidence or high probability trades. So price right now is pushing to the upside. Is there anything tradable right now? You know what? I know people that would take a long here, right? But in my opinion, long term, you'll be losing money. We got to wait. We got to be snipers here. We got to wait for the right opportunity. Price has to manipulate, screw over buyers or sellers, and then we take it the other direction. Okay, so the first PDA that I'm looking for right now is going to be let me fix my windows here. It's going to be the 15-second first fair value gap. So price right now is pushing to those equal highs that I have the eyeball on the 1 minute here on the bottom left. First fair value gap still hasn't formed yet on the 15-second chart. We're still waiting. Remember, today's the 23rd. Looking at the last 2 years, nothing exciting happened on the 23rd at open. I think the year of the 22nd it did, but not on the year of the 23rd. And today we're in the year of the 24th. All right. Remember, first fair value gaps, very strong fair value gap. It has to form on the 931 candle. So this right here, it's not a 15-second first fair value gap because it's on the 930 candle. This candle happened at 930 with 30 seconds into it. Can price just move all the way to this target from here? It can. But I would have my stop loss open to the Judah, the swing, the takeout, and then the push higher. So when I trade, I'm going to let these trades go every time. But when I do take them, it's after that Judah, after that fake out. That's when I strike, and that's how I reduce my losses and I increase my wins. All right. So the 50-minute fair value gap here, it's trading to the upside. It's breaking higher, which is good. What would be really nice to see is a close above it, but not taking out these highs, coming back lower, using this as inversion, and then going higher. But it's gonna tag it though. At this point, 95% chance that this will get tagged in the next 5 seconds. And there you go, it's tagged. Okay. Could we have caught this trade? Technically, you could have traded this right here. This fair value gap, but I've seen it too many times at 930 that you get faked out and you take a loss. So we are looking for conditions that are repeatable over and over again. We don't have FOMO, and we wait for a proper trade with proper PDAs based on ICT's teachings. There's still no fair value gap. First fair value gap that has formed that we want to trade off of. You can see right now price is very efficiently trading. So it's really painting back and forth through all these lines. Technically on the 15-second, this is considered a MMS, a very weak one. But you can see here, it disrupted lows, it punched higher, ever so slightly. Even if the body closed above it, it would have been a stronger market structure shift, but this is still considered a market structure shift on the 15-minute chart. But I do want to see, okay, we got our first fair value gap here for him. Okay, so this right here, this is our, I call these FFGs, first fair value gap after 930, 15-second. Okay. What has price done? It's taken all its liquidity out. It's reversed. It's created a fair value gap on the 15-second. And then what price might do here is it might come up, reject it, and then start pushing lower to this unfilled RTH gap. Or it might continue going higher. Again, the timeframes are painting a different picture for me. This 15-minute here, if this closes above it in 9 minutes, we're bullish. We had an MMS. We do want to see bearish price action on the 15-second on the 1 minute, but again, everything's pointing right now to the upside with minimal downside. Like even if price comes back down to this fair value gap and then rejects it and goes higher, I would not take that long because you've got relative equal lows here below us, right? The RTH gap has not been traded to yet. There's too many negative confluence factors for me to want to take a long from this area here. We want to see more. And once you see more, then we'll start targeting 741. Nice. Price came up once higher, took out buy side here, dropped lower to the first fair value gap. Look at the 1 minute here. Not a single fair value gap yet has formed. Again, indicating that this market is being efficiently delivered right now. Could I get a read from chat? Who thinks it's going to hit these highs here? And who thinks it's going to drop lower? So guess, and they're all guesses. 741 to the upside, or do we think we're going to go back to this NWOG below? I want to see shirts. Let's go shirts. Yeah, shorts. Okay. There you go. Now it's going to start taking into this RTH gap. It could just use the upper portion of it, reject it and go higher, but now it's going to be digging into it. Let's see if the 50% mark of this RTH gap is going to get filled too. So it taps that 4-hour fair value gap. You guys want to see shorts there? Yeah. So these relative equal lows have been taken. We have new relative equal lows that have formed here. Price is Look at this. Does this seem high probability to you guys? It's just all the bodies just almost sat within this 1 hour fair value gap here from Friday. So can today be an inside bar? It can, for sure. Right now it's still an inside bar. But more often than not, when we open up bullish like this, I'm always trying to catch a short to at least the RTH gap of 50%, just because the stats are with you. It's so easy to make money when you keep targeting this RTH gap within the first 30 minutes of the open. We also have news that's coming out in 21 minutes. It's the only news for the day. Most likely at 8:30 today, or sorry, 10:30 today Eastern. I'll be closing down my stream. I feel like it's going to tap that 4-hour for G at 10 to 11 o'clock macro. Yeah. Possibly. I might stream tomorrow. I think tomorrow definitely I won't be trading unless I see something extremely clean. But on the 25th, definitely not. It's always good to look at price action during these days. It just gives you that much more experience on what happens pre-Christmas. But as of right now, look at this, guys. This is messy price action on the 15-second. It pushed up higher, and it's just moving sideways. It created this first fair value gap on the 15-second, but you can see here, it pushed by it, it rejected it, went below it, went above it, went below it. It's indicating that it's not respecting it as I would want it to respect. So the next macro is going to be at 950 to 1010. It's dancing around it. Exactly. When I see stuff like this dance of doom, it's an indication that you shouldn't be trading this, because it might dance around for 5 more minutes, 10 more minutes. It might stop dancing. It might stop dropping from here. Start dropping from here. But again, this is a low probability condition right now. Like, look at the 1 minute. If 15 seconds is too much for you guys, just look at the 1 minute. It's moving sideways. So if I were to guess when it might start moving, it's going to be at 950. that's when I think that the algo might pick up if it keeps doing this, and it might push into a direction. So this has been tagged. We can remove this eyeball here. This eyeball can be removed as well. All right. But you can see, like, zooming out, how nicely price delivered today. Create a consolidation, pushed lower, filled the NWOG, pushed higher, took out these relative equal highs. This is what this is what price does. It takes out one side and then goes to the other. And if you can find opportunity within it, then all the better. Could I have found opportunity going long from here? I don't know, hindsight. Like, nothing is super standing out to me. Like, we did have a 1 minute market structure shift here. Came back down. None of the bodies closed below the NWOG ever since this crazy rejection. And that could have been your sign that once it broke these relative equal highs here and came back down lower. I don't know. Like, the only trade that I think I would be comfortable taking is like, when I saw these bodies close above it, maybe something like that. But again, I don't ever think I would take this position real time, but looking for the cleanest possible setup, it's just the multiple rejections of the midpoint and of the NWOG indicating that it's going to go higher to take out these highs. But that would have been a tough call. High risk, but high reward there. Okay, it's still dancing. See, doesn't want to stop the dance. The 15-second first fair value gap dance. I'm gonna grab some. Actually, I have some water here. Okay. Okay. What's happening here? Price is pushing into the RTH gap right now, marked in light green. It's currently sitting in the upper quadrant. These lows are suspicious here. It's the pre-930 lows, 915 and 924. There's liquidity sitting here. Oh, and we have our first 1 minute, first fair value gap, ladies and gentlemen. 1 minute. Okay. The question is how price is going to react to these right now. Price is trading into this first fair value gap. It tapped it. Let's put this on the 15-second chart here. Okay. I do like to see how price on the 15-second reacts to these levels as well. And the way you trade these first fair value gaps, it's not so much a price going into them and just rejecting them right away. It's price going into them, rejecting them, creating a first fair value gap, or creating a fair value gap after that, and then you take that lower high. But look at that there. Look how strong this fair value gap is. I can't say I'm surprised that it just dropped from there. And look at that. The midpoint of the RTH gap has been hit. What are the chances? What are the chances? There you go. So that has been filled within the first 30 minutes. So look at that. 70% chance it gets filled. And the question now is price going to go long or short? I really like this liquidity sitting here above us, but I also like the liquidity sitting below us from an hourly perspective. So, and you can see here on the 1 hour, price is really struggling to either break this fair value gap, either to the upside or to the downside. So we'll see if price gives us something in the next 45 minutes. If not, I'm done for today. I'll be closing out the charts. If I see this liquidity taken, or just overall a bullish push higher, I might use these as inversions and take it higher. I see that as a possible trade for today. But you can see here on the 15-minute, that was a crazy rejection though. Just took out that liquidity that was resting above these highs, dropped down lower, went into this RTH gap that it has formed. And we are about to enter the 950 macro. I'm going to start mapping some of these fair value gaps here on the 15-second chart just to see how price is reacting to them and if they're going to be turning into inversions. Here's the first one that formed. That's significant. We do still have an unfilled area here within the RTH gap. Can price come down here? Yeah, most likely, yeah. Price wants to be efficient, right? If price decides to go up higher and it leaves us open, that's a breakaway gap. And that is something that's going to create a lot of bullish pressure and take us up to those highs that I've mentioned before. But I have a feeling it's going to go lower here. At least take out these relative equal lows here on the 1 minute. Boom, there you go. And they have, they've almost been taken. Nope, they've been taken. You can see here, it wicked ever so slightly below it. Is it a good idea to take a long from here? No. All right. So the RTH gap has been filled here. The 1 hour is closing in 10 minutes. You can see here, try to push into the mean threshold or drop down lower. If it breaks below this NWOG and closes there along with the 1 hour, I think I can agree with chat here that I think shorts are on the table. NWOG is being reacted to. A push higher. Possible fair value gap forming here for the upside. Again, is this an opportunity to long? Super high risk, sure, but price is in a bearish order flow right now. And again, we're always waiting just for a bit more. Just get that confidence up to 70% before taking a trade, and then would execute. You can see what price did here. It took out the liquidity resting below all these equal lows here from 846 and 859. For me, a dead giveaway that is going to go higher is if it starts breaking these first fair value gaps to the upside. That's when my confidence skyrockets going up. But it's still sitting in the lower half here. No fair value gap has formed there, so let me delete that. I thought it would. Right now it's entering one of the first SIBIs that formed on the 15-second, and on the 1 minute, there is this is the bearish order block here. Bearish OB. If you want to see signs that price may be turning around, this is just a fake out here. Look on the 15-minute, right? If you were to guess longs from here, I would say that's most likely the lower probability. So 1 hour for me looks bearish. 15-minute looks bearish. It's closing in 7 minutes. 5-minute looks, we got news in 8 minutes, by the way. Yeah, this was the Judah right here. See, 930 open, straight up. To get out these highs, and then it dropped lower. How it reacts to this NWOG here and how the 1 hour closes is going to give us, price is going to tip its hand on which way it wants to go. CBS formed here. The NWOG does not want to be broken through. Look at that. Okay. So this act as inversion. And now it's pushing higher. Right now, my bias is still 50-50. I personally don't know which way it's going to go. I can see it going both ways. And I'm waiting to see what's going to happen around those first fair value gaps. If it's going to break it to the upside or if it's going to break the end dog to the downside. And most likely, I think I'm going to, if I were to take something, I'd wait after the news, after the 10 o'clock news. It is medium impact, so it's not red. But price might pick a direction at 10 o'clock. But right now we are in the 950 to 1010 macro. What do you want to do, price? We've created a small mini fair value gap here on the 1 minute. Like that blue. Price pushed from it. It went slightly below the mean threshold of it, came up higher. It's surpassing all of these downside CIBs. So the first one has been essentially traded through. And we'll see how this one gets traded through as well. I do want this hourly here to close above. If it does, be more bullish than bearish at that point. So we got a 15-minute high test. A 15-minute low test is forming right now. The RTH gap has been fully filled through. The NWOG has been tagged once again. I have a feeling price is going to be going to the upside right now from where it's at. Here's the final boss here. This risk for value gap, 1 minute. So inverted. News in 2 minutes and 10 seconds. Okay. Broke above it. Or try breaking above it. Push back below. News in 1 minute. And if news wasn't in 1 minute and it created a bullish fair value gap out from this first fair value gap on the 1 minute, I would be taking a long there. We'll see. See what happens in 1 minute. Now there's no point of trading through news. I'll just wait for, look at those right here. Created a SIBI. Hopefully it breaks through it, creates one onto the upside and goes higher. So I'd want to see news do that, come back lower, and then take it higher. And then the target would be right here. That's kind of like bias one. If price were to do this, then what? What price can do is just reject this 1 minute fair, or this is a 15-second fair value gap here. No, this is a 1 minute right here. This 15-second SIBI, I might reject and just shoot lower again. But we'll see in 10 seconds. What's price going to do? It's rejecting this first fair value gap. It's dropping lower. The 15-minute right now is painting craziness. What is the 5 minute showing here? Yeah, nothing too crazy. So it's always good to try to figure out what price will do pre-news, because the moment it does it, just execute on your original plan. If it doesn't do that, then take a step back and see if there's an opportunity to either rechange your bias or possibly go in the other direction. We can see here, we've got a 1 minute fair value gap here that it traded to. And if you don't know what price is going to do, you don't trade. Very simple. All right, price right now just could have went to the upper quadrant, filled in this fair value gap, and now it's going to go higher. I don't know, right? We just have to see what price is going to give us now and trade off of it. On the 1 hour, price is still sitting within that 1 hour BISI, that blue box there. 15-minute, it's spiked up and then down, hitting all pools of liquidity. 5 minutes, not showing me much at all. I would only take a short if it breaks this level right here, and I'd only take a long if it breaks the first fair value up to the upside. That's kind of my 2 lines. Everything between that, I see it as a 50-50 draw. And if you guys are enjoying the stream, if you guys like the stream, I'd really appreciate it. It really helps me out from my end. If you guys want to criticize me, let me know what you want to see for me or what I can do better. But really appreciate subs and likes. And you can see here, when I'm uncertain, the market's also uncertain. You can see it hasn't done much. It's just kind of sitting within this RTH gap right now. Okay. Look at this 1 hour close right here. The body's closed below the mean threshold of this BISI. Let's see on the 4 hour here. Yeah. I can see why you guys are targeting the high of this 4 hour BISI. High of 4 hour BISI. Oh, this is a BISI. Here are the 2 levels. A possible trade, looking back for your notes and my notes, could have been right here, the first formation of this fair value gap, and just taking a short from there after taking liquidity. I would consider that as like a B trade. I didn't execute on it, but this right here, it was on the nicer side of things, and the target would have been the mean threshold here of the RTH gap. The price on the 1 minute hit the first fair value gap, broke down lower. It inverted the downside, this fair value gap. And we've got this tiny 1 minute fair value gap here marked in blue. Once it surpasses that, it's going to attempt to break the NWOG once again. But I don't see myself positioning in any way right now a possible short or a long, because I wouldn't be able to have my stop loss at a meaningful position where if it passes that, it means that your bias is wrong and it's going to go in the other direction. That's really what you want your stop loss to do. That line in the sand that once it breaks, you pay it, my bias is incorrect. There you go. It's pushing to the downside now. Stop loss gone. Did you go long there? System closed. Good. Close it down. To be honest, right now, from now to 10:30, it's gonna be tough to catch something unless like something crazy shows up. I think there's a 90% chance nothing will show up in the next 20 minutes. But if it does, then it's either short or long, and I just don't know yet. I just don't know yet. Like if I was short, like if I was going long, I don't know which way you were going, but my stop loss would be below this level here, this analog. It's doing a really good job of respecting it. or it'd be above the first fair value gap here if I was going short. So everything here in between, there's nothing significant. So you can see right now price is trying to break the NWOG once again. We'll see if we get a break downside. The moment it breaks this, it's a really strong PDA to break back up to the upside. Yeah, it's breaking. Let's see if it's going to close within it. Okay, so closed right below the midpoint there, both on the 1 minute and the 15-second. And then most likely, let's see here, if we're looking at shorts, where would you want your short? Crazy stop loss. Probably be like start of the 1 hour. See how it's rejecting right now? But like, let's say if it does break down lower and comes back higher, it'd be like something like this. If price does present itself, the option. Like you want it to be above the NWOG, above a bearish order block, which it could be this. We'll see. But that's like a possible. Or just going to bounce off it once again and go higher. It's just when price is at these key levels here, it's really hard to trade off of. Because these are targets that we choose. Not so much trading off of them. So price hasn't closed the body yet, either above or below the 15-second. Okay, it's pushing to the downside now. Oh, and it popped back up. Here is something that might be worth taking. Okay. So now I might take a quick short here. I'm just waiting for price to come back, tag me in, create a fair value gap. Price gets into this fair value gap right here. I'm going short. Need to go. Come on, come back higher. So right now, my confidence level is that we're going lower. And is price going to tag me in? I don't think so. I think it's just going to drop from here. Come on. Don't run without me. If I enter here with a stop loss here, the R is not there. So the only way to get in is going to be something like this. That I would be comfortable in. And then I'd be going to this, probably this end dog right here. This is going to be a 1 to 6 to 1. Okay. Oh, and there is another value gap right there. I'm shorting right now. I didn't see that end dog right there. And this is going to be a quick one for me. I'm just targeting this right there. Flattening. Okay. Did not execute that correctly, but I saw that fair value gap a bit too late. It rejected it. I got in somewhere like this. And then I tried to exit here, but I exited there. I don't know how much I got there. 40 bucks times all my accounts. Again, it was a quick scalp there. But like that's where you see the momentum, you see these rejections, and then it's very easy to put your stop losses in and out. So sometimes when markets move so fast, I can't get in properly and get out properly. It was literally 40 seconds, the whole thing, but I'll take my 40 bucks times 5 accounts, which is, I don't know how much, 200 bucks. Okay. And price right now is digging into, okay, so if you were to hold it right now, you have to trade through the NWOG of 219, which is last Thursday. You'll have to break it and then go lower to Friday's NWOG. So, and you're also breaking into the upper half of the 1 hour fair value gap as well. So there's now a lot of levels, but I think if you guys could have caught something here, this would have been the optimal entry if price did go up, but all it did is it just traded to the first 50-second fair value gap and it dropped lower until it hit target. It hit midpoint of the end dog of 219. And price, again, it hit its target. Who called this level? Someone called it. I think it was Claris. But someone said the top of the 4 hour fair value gap, which it just tapped. So all in all, I think I could try to catch one more scalp. But I think all in all, I think price action, it did its damage. Like if I were to catch another scalp, can you please, how to trail stop loss? Just hold on to the stop loss and just drag it. That's how you trail it. It's all manual. All manual, man. Trade running either profit or loss. Yeah, you just move the stop loss with it. So you either drag it up or drag it down. So when you create a position, I'd recommend you going into settings, going into risk settings, create like a risk amount, like $200 or $100 or $1,000, depending on what your risk is. And then when you create a trade, it automatically creates a stop loss for you. And then you can start dragging it however you please. So here was the 15-second trade that I took. Again, ultra scalp. I think I got it for like, was it 21 points? I felt like it was a lot less, but again, it was tiny. Something like that. I think I caught it a bit lower. By the time I caught it, it was more of a 1-to-1. There you go. And again, like my confidence here was really high. And that's why I took the scalp, just because bearish price action, the draw to the end dog, the break of the end wog. There was a breakaway gap. It created a second fair value gap, traded into it. The moment I started rejecting it, that's when I took it short. How do you do that? Alec, are you talking about the risk parameter settings? So if you want to automatically create a stop loss, and I highly recommend it, is under settings, click on risk settings and put in a risk amount and an amount for profile. For profit. Man, I'm tired today. Can't speak well. So every time you enter a trade, it will automatically map your stop loss and your profit target. So if your average risk is like $200 and your average profit is $400, then put those numbers in there. And then the moment you enter a trade, it's going to automatically map stop loss and TP. And then once you're in there, you can do micro adjustments just by dragging the line above specific fair value gaps or order blocks. It's a lot easier. It's what I do. And sometimes if, let's say I want a $200 risk and I short, let's say 5 micros, and my stop loss is a lot higher than I want it to be, then I usually move it down to where it should be. And I start adding in positions into there until that stop loss hits $200. So maybe it wasn't a 5 contract short. Maybe it should have been like an 8 contract short, for example. So I use that built-in system to, within the first 10 seconds of a trade, to quickly dial in the right amount of contracts without doing any crazy math on my end. I feel like all of you should be doing that. It's very easy. All right, look what price is doing right now. It touched the 1 hour BISI. It punched higher. It's going to be sitting above the NWOG any second now. And price might do 2 things. It might reject it right now, or if it pops higher, it might be going to this level right here that I have indicated. 743. Oh, it rejected it. Look at that. See, price is random, guys. Just rejecting random levels. Dun, dun, dun. See, now I really want to take one more trade. 3 for 3 today. Okay, price is trying to break to the upside of the NWOG at 1223. Mm-hmm. Like, would I go long from here right now? The answer is no. It never broke it to the upside. I do have upside targets, but just because they're there, it doesn't mean that price is going to do what I want to do right now. See, it's rejecting to the downside. Price might keep going lower and digging into this 1 hour VISI. It's just about finding where you feel comfortable with reading price, where you're confident and taking those trades. The price is rejecting the NWOG right now. Like short term, gun to my head. If this forms, which it did, this fair value gap, I'll be saying it's shorting right now. There's no reason for it to go long. If it breaks this NWOG and it goes to the upside, then my bias will slowly start shifting to the upside. It's like a spectrum. So it touched that 15-second fair value gap. It dropped lower. But am I confident that it's gonna, like, if I should trade short from here? No. Even though that I think it's gonna go back to this end dog. Right? Order flow is bearish. It's 1019. Once 1030 hits, probably going to close down the stream. Like if we saw a massive rejection right now to the upside, it breaks the NWOG, it breaks this RTH gap, it breaks the 1 minute fair value gap. There's a very high chance that we're hitting these highs here. But it needs to do all that, right? It needs to show me several things before I take a longer short. If you think that, oh, if I catch it now and it might do all that, and I'll keep a tight stop loss. More often than not, that you're hoping for the future to happen, and you will get stopped out, and you will be wrong. And once in every 10 trades, you'll be right, and you'll feel like a god. But for that to be repeatable, highly unlikely. All right. If you guys have taken a loss up until this point, I'd recommend possibly not trading. If you pulled money from the markets, probably recommend at this point to keep your money and not to trade the next 40 minutes. I am going to lightly watch the markets for the next little while. I just want to see how it's going to react to these levels here and if it does break above the RTH gap. But for now, it's my bias for the short term is short until this NWOG gets broken to the upside. But right now we're just between these two levels, the NWOG, the end dog. We've just taken out lows. We punched into the 1 hour fair value gap. This could be the turn of price to the upside. There's just so many different variables of what price can do that when this happens, the answer is you don't trade. So on that note, if I don't live stream tomorrow, I should. I'll have to do a bit more back testing to see how price acted on the 24th of December to see if I can possibly anticipate something. Because it's the first time I'm actually actively trading it publicly. If you will, you'll see a live stream from me. If not, I hope all of you have restful holidays. I might have some streams later on next week, maybe the 2nd or 3rd. I don't know. But hopefully, on that note, you guys stay safe and we'll talk soon. Thanks, everyone. Bye for now.